So, what are RSUs? How are they taxed? And how, if you're receiving RSUs as part of your compensation, how should you manage that process? And how should you think about the way that you're utilizing that, what is really, at the end of the day, a form of income to grow and invest in your longer term financial plan? So, RSUs, or restricted stock units, is really just a form of equity compensation that the company that you work for is giving you on a scheduled time frame. So, and that's called, of course, the vesting. So, when you enter under contract with a company in your job offer, if RSUs are part of your compensation, they're going to say exactly the number of shares you're going to get and the time frame that those shares will vest. So, for example, you may get 100 shares of XYZ stock per year for the next 5 years. So as that vesting period comes around, so on the date that those shares actually vest, you're going to get awarded that 100 shares of stock at whatever price that particular stock is trading at on that given day. So as far as taxes, on the date that you receive those shares, whatever the market value is on that day, that total dollar amount is going to drop right onto your ordinary income. So those dollars will be taxed as ordinary income, whether you decide to turn around and sell that stock, or if you decide to keep it for 1 year, 3 years, 5 years, etc. So if, let's say, your shares vest and the share price is $200 per share, and you have one share, that's going to add $200 of income onto your tax return for that year. Now, let's say you sell it 6 months later. Well, now, and you have a gain, a $10 gain, so a 10% gain. Since it's under 1 year, those dollars are going to be taxed at a short-term capital gain, which is basically the same as your ordinary income tax bracket. But if you hold it for more than 1 year, if you say, hey, I'm going to hold this amount of shares, I'm going to sell this amount, that amount that you decide to hold, as long as you hold it for more than a year, and if you have a gain, you will have a long-term capital gain, which is typically taxed at a lower rate, about 20% for most folks, than the ordinary income tax. So how should we think about how to manage RSUs? And I think the simplest way to explain RSUs are to look at it as your company is just giving you a cash bonus, but instead of paying you in cash, they're paying you in stock. So then you have to ask yourself, okay, well, if my company gave me a $50,000 cash bonus, what would I do with it? Would I turn around and invest it into shares of my company's stock, or would I maybe do something else with it? If the answer is anything other than I would invest that cash into my company's stock, then you're likely going to want to sell those RSUs at the market value and then find something else to reinvest that money in that may be more suitable for your overall risk tolerance or your objectives. So we see a lot of clients who end up with 70, 80, 90% of their investable assets in RSUs or shares of a company that they got because of their RSU vesting schedule, which creates a scenario where they're heavily overexposed to the risk and volatility of that one stock. There's a whole bunch of scenarios as far as behavioral finance that come into play because you have a lot of biases because you work for that company. Maybe you have a lot of confidence in that company and the company's future. Maybe it's had a really good year and the stock continues to go up. So you think, I'll just leave it in shares of this company's stock that are going to give me all this growth. The tables kind of turn, though, as every company does, when volatility comes into play or the stock doesn't have such a great year. And then you really see that, okay, maybe I am overexposed to this one stock and I should look at other opportunities. The other thing that comes into play is a lot of individuals who are receiving these RSUs really just don't know if they sold those shares, what would I reinvest that money in? What should I do with it that's maybe better off? And that's where a financial advisor or a fiduciary can come into play to really look at your overall situation and some of the options that might make more sense to diversify your overall investable assets away from just riding your whole future on that one particular company stock. So everyone's situation is going to be a little bit different depending on your tax bracket, depending on your vesting schedule. If you'd like to talk more about your specific situation, the majority of our clients are engineers and senior engineers in the technology space. So this is a scenario that we work with very, very often. So we could certainly create a plan specifically for you on how to manage that situation. If you've had RSUs that you've held for a number of years, maybe some of them you have a loss, maybe some of them you have a gain. So there's certainly a tactical way that we can look at that situation to create the least amount of tax liability while at the same time reducing your exposure to that one stock. So you can certainly reach out to us at Jesani Wealth Management. My name is Andrew. I'd be more than happy to assist you.